Welcome to Finance with Justus. I'm Justus. Coca Cola, Warren Buffett's child, has just released their Q3 earnings. This is gonna be a quick rundown, because sadly there is no balance sheet, so we only get a quick peek at the earnings. It was a fantastic year for Coca Cola. You can see why Warren Buffett likes this company. It is a big hedge against inflation. I think Coca Cola is one of the biggest companies when it comes to shifting the cost to its consumers. They had a 16% organic revenue growth. 16%, you gotta think about this. And at the same time, the units that they have sold only increased by 4%. So if you add like around 10% inflation onto it, they shifted all of the inflationary costs plus more profit for them onto the consumer. That is a fantastic ability. They managed to do this without a decline in unit growth. Sadly, they only had a 7% growth in operating earnings. That was due to the strong dollar. On a constant currency basis, they achieved 18% operating earnings growth, so that is fantastic. The only thing that is maybe important is Europe had a slight decline in units of 1%, but that was entirely due to Russia. Otherwise, it would have apparently stayed flat according to them. Their non-GAAP earnings grew by 7%, so in line with operating earnings. So when I think about that, operating growth of 7% and earnings per share growth of also 7%, that is great. It translates into the earnings per share, but it also means not a lot of buybacks happened. Which makes sense. The company is very expensive. I would rather not want them to buy back that many shares and rather pay out a dividend. There has been a slight decrease in free cash flow due to working capital changes. But this is nothing permanent, it's just timing and accounting. If you are more curious about how that works, you should probably take a quick class on accounting. They make a lot of fun if you're interested in investing. And Warren Buffett even said himself, you need to speak the language of business, and the language of business is accounting. So just take a quick lesson on that. And you will see that the working capital change is nothing permanent, so they still had a great free cash flow this quarter. Like I said, there's sadly no balance sheet yet out. We can't see exactly how much debt they paid back or if they took on new debt, but you can still see that the company performed fantastic this quarter. It is the inflation hedge when it comes to companies. The only issue is for me, it is too expensive, but Coca-Cola is always expensive. So I don't think Coca-Cola is gonna ever come to a point where it will be an attractive buy for me, just because it is such a great company, but it is just always very expensive. Even with interest rates rising, the P/E ratio is still very high on this business, which is mind-blowing to me. So yeah, great company, expensive stock. I can see why Warren Buffett loved to buy it back then when it was cheap, and he's probably gonna hold it forever. So he's gonna keep holding around 10% of Coca-Cola. So think about it, every time you drink a Coke, 10% of a profit goes straight to Warren Buffett. That's what it is with this quick rundown of the Coca Cola Q3 earnings. Do you own Coca Cola stock? Put it in the comments. Have a good day.